Hello and welcome to Crypto Weeklies. Today in this video, let's talk about Polkadot and its crypto token DOT. We'll be conducting machine learning based price analysis, regression analysis, as well as accumulation strategies for DOT. None of the content is financial advice. The chart that you're seeing on the screen is the weekly price action of DOT, and on top of the weekly price action, we have drawn the Fibonacci levels. Right now, the price of DOT is at around $5.28. That represents about a rally of about 20% over the last 24 hours, or the last 7 days. DOT has rallied by about 42%. You can see still ranked within top 20 by market cap. Not too long ago, the price of DOT was less than $4. That has now changed to $5.28, and again in terms of percentages, about 40% rally in 7 days. So the key levels to watch in terms of the Fibonacci intervals is in the last bull run, last mini bull run, that is in early March of 2024. DOT failed to manage to reach this 0.23 Fibonacci level. That level corresponds to $15.78, and the secondary level to watch is the 0.38 Fibonacci level at around $23. So those are the two levels to watch in terms of the weekly Fibonacci based analysis for DOT. Now that we have covered that, we'll focus on our own website, cryptoweeklies.com. The link is on the bottom of your screen. You don't have to sign up or pay for anything. We'll start with the machine learning based price forecast for DOT. The current price level indicate that DOT is close to the previous bottom that it hit back in 2023 October. From there, DOT rallied from about $3.8 to about $10.8, about a 3x rally in between October and March of 2024, about 4 to 5 months. Ever since that, DOT has given up all of those gains and essentially double bottomed to the levels close to the levels in October 2023. One could argue it's a slightly higher high, but again, that is just like splitting a hair. In terms of the machine learning based analysis, the trend is down again. The trend has been lacking for several months, you can argue for several years for DOT. So no wonder that the price action based machine learning based price action model trend on this weekly price action for DOT since 2020 is not giving any positive trend at this moment. But if the bull market were to come back up like it has had over the last 24 hours or last 7 days, you can see over here the market cap has gone above 2.6 trillion. The fear and greed levels are at around 74. In terms of our own social sentiment analysis based on the last 24 hours worth of news, you can see each of the narrative is on the bottom of your screen. You can hover over them. Now, overall sentiment is at around 86. That means a lot of bullishness in the market. With that, but this DOT's price action has not reflected that. But if it manages to do so in the coming weeks or month, the 1 standard deviation bull case and the 2 standard deviation bull case, we'll discuss shortly after. The 1 standard deviation bull case for DOT, the weekly average price action at around $4.68 again. Does look like DOT might be closing at around $5, but doesn't mean that the weekly price action would be $4 higher than $4.70, because most of the week was spent below these levels. But for the next week, the 1 standard deviation ceiling at around $4.80, if that gets breached and consistently DOT performs with a higher valuation than this 1 standard deviation ceiling, then the 2 standard deviation ceiling comes into the picture, and that forecast is more bullish for DOT than the 1 standard deviation. That is because it considers about what could be a theoretical ceiling at 95 percentile confidence level. That is the price staying below that orange line is likelihood is at around 95%. So 95% chance that the price stays under this orange line. Again, cryptos have a tendency to test this orange lines in the peak euphoria phase of the market cycle, like they did. You can see this angle of incidence for this line is much less steep than the angle of incidence it was back in December 2020. And 4 years later from December 2020, per the 4-year market cycle theory, that would be sometime around January 2024. And if that euphoria based price forecast for DOT is between $5 and about $29 for DOT for the for the initial half of the year 2025. In terms of the tabular valuation, they are also available over here. Most of the time we will be either spending in this yellow or this orange line, provided the market stays up. In terms of the regression based analysis, right now prices coming close to the 1 standard deviation ceiling. You can check over here. I will get rid of the other 2 standard deviation bands at this point. Market has the price has the tendency to be spend 70% of this of its time inside these yellow and green bands. In the last rally, prices did go slightly higher than the yellow band, but kind of had a significant resistance at around this orange line. The orange line is coming in at around right now at around $7.45 for DOT, and the yellow line is at around $5.43. So price is close to the 1 standard deviation ceiling. If the price were to meaningfully hold its presence above this 1 standard deviation ceiling, then the secondary level at around $7.45, that becomes the key to watch. That is the machine learning based analysis for DOT. Again, none of this content is financial advice. In terms of the accumulation strategy, we have 3 models: the SMA model, the DCA model, and the TWAP model. The SMA model looks at the 20-week simple moving average, and based on that relationship between the price and the 20-week moving average, the color codes are assigned, and risk level are normalized between 0 and 1 in 10 steps. Right now the risk levels are around 28%. That means it's the third best time to dollar cost average DOT per this model. Again, this is a very short term model geared more towards identifying when not to DCA, to avoid DCAing at a higher risk level than you need to DCA. That means provides a range of price action. Let's say you are comfortable DCAing at with risk level less than 30%. That is again still available at around the risk level at around 28%. If you are comfortable till about 40% risk, again most of the price action would be at this level. And again, based on your own risk tolerance, again this model helps identify, also provides some risk levels risk level based price, corresponding price at some of the higher risk level, to identify what could be a theoretical top for DOT. But this model right now the price is between 0 and 5% risk. That doesn't mean that prices so the risks are ever 0. They're just rounded off to 0. Per this model, again the moderate to high risk based forecast is between this $22 DOT till about $27 DOT, and the higher end of the spectrum, higher end of the risk spectrum, between $28 and about $35. So these are the 2 forecasts based on the SMA model. The key finding at around right now at around 28% risk offers about 72% reward. The 0.6 to 0.8 valuation points to a price between $22 and $28. The 0.8 to 1 risk between $28 and $35. So coming to the second model, which we have for based on the regression, kind of similar to the regression analysis at a weekly level that we did with the candle chart. This is at a daily level. The peak regression value at this point at around $6.20 represents a risk of about 50% risk, 50% reward. Again, identifies some of the best times to dollar cost average based on the risk level. Again, if you again go back to the hypothesis that DCing below 30% risk for DOT makes the most sense, this model will help identify those risk levels. Whenever the prices are below this risk, DCing again at your own discretion using this model. Again, none of the content is financial advice, but this helps visually represent what the prices could be at some of the risk levels. In terms of the time weighted average price based model for DOT, again prices are for a prolonged period of time below this blue line. This blue line denotes the time weighted average price. Whenever the price of DOT is below this blue line, historically speaking, that is considered non-bubble phase of the market cycle for that particular crypto, and the risks are essentially rounded off to 0. If we analyze before we analyze the estimated bull target, we'll briefly look at some of the again this is the macro picture of what the heat levels in the wider crypto market are looking like. The latest risk at around 31%, you can see, although although the risks are not close to zero, but they are nowhere close to the highest risk that were evident in back in May of 2021 as well as in November of 2021, where the risk level was meaningfully spending a lot of time above this 0.75 or 0.8 risk, which is represented by this red color or the orange color. Right now, most of the time is spent in this low risk between 0.2 and 0.4 risk level, currently at around 0.31 risk. This analyzes the price behavior for top 100 cryptos by market cap and assigns the overall heat for the market based on volatility, alpha, beta, Sharpe ratio. You can see how this is getting calculated to to come up with a single value to provide a snapshot of what is happening in the market in terms of risk reward as well as how overheated the market is. Back in March of 2024, this levels were slightly concerning. You can see over here, there were a couple of days where the risk went above this green zone. Again, DCing out at your own discretion based on the risk levels which you are more comfortable makes the most sense. A more conservative investor would be inclined to DCA only in this blue zone, which represents the lowest risk level, or slightly towards at the very end of the extent of this green zone, which represents the low end of the low risk. That is one of the ways to DCA. Again, we are in the middle of this pack between 0.3 and 0.4. If and when the risk levels go beyond 0.4, that is when the moderate risk or the high risk regimen begins for the market cycle. We are nowhere close right now. Just wanted to highlight that. Again, how it is calculated is available on the website as well. It's the indicator is available under PeakValley Indicator. You can see over here. And now we'll look at the narrative word cloud. What are some of the popular narratives in the market? Bitcoin definitely the more popular one today. Price action for BTC went slightly higher than 80K for a brief period of time. Again, the altcoins are not being discussed as much. Again, they have some presence on this narrative cloud that is reflective of the social sentiment of the last 7 days related to crypto. The bullish sentiment is up. People are discussing about buying as well as seasonality and election related news. Also some meme coins, some of the other well known alternative coins or alternative cryptos are being discussed, but again, Polkadot not having a meaningful presence as of yet. But again, this gets updated every single day. Again, the recent rally might have some impact on the social sentiment related to DOT as well. With this, I would like to conclude the video. Hope you enjoyed the content. If you did, please subscribe to the channel. Also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.